There is a clock ticking for Bitcoin, and most people don't realize how close we are to the moment that decides its future. In just over a year, decisions made by governments could either push Bitcoin into a new phase of legitimacy and massive growth, or quietly suffocate it until it becomes irrelevant. This isn't hype. This isn't tribal loyalty to crypto. And it doesn't matter whether you believe Bitcoin is revolutionary or ridiculous. What's coming will affect money itself, and that means it will affect you. Right now, Bitcoin sits near historic highs. As this is being recorded in late 2025, it's hovering around the mid-$90,000 range. Institutions are involved. ETFs exist. Corporations hold it. Some governments openly discuss it. On the surface, it looks like validation. But underneath that calm surface is rising pressure. A conflict between centralized power and decentralized money that has been building for years. And in 2026, that conflict reaches its turning point. The reason is simple. Governments around the world are about to introduce something that directly challenges Bitcoin's role. Central bank digital currencies. Digital dollars. Digital euros. Fully programmable state-issued money. Unlike Bitcoin, these currencies are not neutral. They are not permissionless. They are designed to give governments more visibility, more control, and more leverage over how money moves. Over 100 countries are already developing or testing these systems. China's version is already live. Europe is deep into preparation. The United States is moving slowly, but deliberately. When these systems become operational at scale, governments will face a question they can no longer avoid. Do they allow a decentralized alternative like Bitcoin to exist alongside state-controlled digital money? Or do they eliminate the competition? That decision is the fork in the road. If Bitcoin is allowed to coexist, even under strict regulation, it becomes the only true escape hatch from programmable money. A neutral asset outside government control. In that world, demand for Bitcoin doesn't fade, it accelerates. But if governments decide that decentralized money threatens monetary authority, they don't need to shut Bitcoin down technically. They only need to make it unusable legally, and that is enough to destroy most of its value. This isn't theoretical. We've already seen the early moves. Europe passed sweeping crypto regulations that give authorities broad oversight. Privacy-focused coins are being squeezed out. Identity verification is mandatory. The United States is expanding regulatory authority over digital assets through overlapping agencies. China didn't regulate Bitcoin. It removed it entirely from legal economic life. Mining, trading, exchanges, all gone. Why? Because China wants complete control over its monetary system, especially as it rolls out its own digital currency. Bitcoin doesn't fit into that model. Other countries are watching closely. Some are experimenting with heavy taxation instead of bans. Others are openly debating prohibition. What matters is not any single country, but coordination. And that's where 2026 becomes decisive. Next year, global financial institutions and major governments will be sitting at the same table discussing unified approaches to digital money and crypto regulation. When the largest economies move together, markets react instantly. If the message is restriction, Bitcoin doesn't get a long, slow decline. It reprices immediately. So let's be clear about the two possible paths. In one future, governments tolerate Bitcoin. They don't love it, they don't promote it, but they accept that banning it would be ineffective, politically risky, and economically costly. In this version of events, CBDCs roll out, but people quickly understand the trade-off. Convenience comes with surveillance. Efficiency comes with conditions. Money becomes programmable, controllable, reversible. That realization creates demand for an alternative. Bitcoin doesn't need to replace national currencies to succeed. It only needs to exist as an opt-out, a store of value that cannot be diluted, frozen, or rewritten. As trust in state-issued digital money weakens, Bitcoin absorbs that distrust. Even small capital flows from global wealth into a fixed-supply asset have dramatic price effects. In this scenario, six-figure Bitcoin prices are not extreme. They're logical. Institutional investors increase exposure. Governments quietly accumulate it as a hedge. Corporations continue adding it as a balance sheet asset. The supply doesn't change. Demand does, and price follows. But there is another future. In the second path, governments decide that decentralized money is incompatible with centralized digital currencies. They don't argue ideology. They argue stability, safety, compliance. They coordinate restrictions across major economies. Exchanges lose banking access. Custodians shut down. Possession becomes legally risky. Businesses are forbidden from accepting crypto. Bitcoin still exists as software. The network still runs, but its usefulness collapses. Liquidity vanishes. Mining becomes unprofitable. Security weakens. Confidence erodes. Not because the technology failed, but because the environment became hostile. This isn't Bitcoin being hacked. It's Bitcoin being isolated. And markets don't wait for enforcement to begin. They had priced expectations instantly. Once people believe an asset will be unusable in most of the world, they exit quickly. So what determines which path we take? First, public response to digital currencies. If people accept CBDCs without resistance, governments feel empowered. If privacy concerns grow, adoption slows, or technical problems emerge, pressure builds. Allowing Bitcoin to exist as an alternative may become politically useful. Second, global power dynamics. If the dollar remains dominant, the United States has less incentive to tolerate alternatives. If dollarization accelerates, Bitcoin may be seen as strategically useful rather than dangerous. Third, politics and lobbying. Crypto is no longer a fringe industry. Millions of voters own digital assets. Major firms have influence, but banks and regulators also have influence. This battle is happening behind closed doors. Fourth, enforcement, reality. Democracies are not China. Banning something that can be self-custodied, transferred peer-to-peer, and hidden behind encryption is expensive and imperfect. Governments may prefer control over prohibition. And finally, competition. If some jurisdictions remain open while others ban, capital flows, innovation relocates. No major economy wants to surrender an entire financial sector to rivals. My assessment is that the most likely outcome is not a clean victory for either side. Bitcoin probably survives, but under pressure. Heavily monitored, taxed, regulated, allowed, but discouraged. Not killed, but constrained. That outcome doesn't send Bitcoin to zero. It also doesn't unlock its most extreme visions. It keeps Bitcoin alive as a hedge, not dominant as a system. That uncertainty is why positioning matters. If you hold no Bitcoin, a small allocation can make sense. Not as belief, but as insurance. Limited downside. Significant upside, if the favorable scenario unfolds. If you already hold a large position, risk management matters more than ideology. Concentration in an asset facing regulatory uncertainty is dangerous. Reducing exposure doesn't mean abandoning conviction. It means surviving uncertainty. Self-custody matters. Exchanges are easy targets. Keys are not. Watching policy signals matters more than price predictions. Markets move before laws are finalized. And above all, planning matters. Decide your actions before volatility forces emotional decisions. This moment isn't about whether Bitcoin is good or bad. It's about whether decentralized money is tolerated in a world moving towards centralized digital control. That decision is approaching fast. By the end of 2026, the direction will be clear. Bitcoin will either be on a path toward deeper integration into the global system, or it will be pushed to the margins. There won't be confusion anymore. That's why this period matters more than any bull run or crash before it. This is not a cycle. It's a verdict. Pay attention. Stay flexible. And don't assume the future will resemble the past. Because the next chapter of Bitcoin isn't being written by miners or traders. It's being written by governments. At Finance Matters, we explore history, economics, and perspective without hype or speculation. If this video added value, subscribe to the channel and press the bell icon to receive future educational releases. Your support helps keep this content independent and informative.